least, auto gold. Now, this is a different conversation. For gold, we have wrecked gold, destroyed gold. The end of June, we were still buying. Bang. 1,800 pips later. Now, I got friends in the industry, right? No, not a lot, but the ones that I got, cool people. And some of them love the way that I trade gold. One of the problems with the people who don't know me is that they don't understand why I would allow the market to drop in this way. If you're in the community, you know why, right? I hyper focus on what I ultimately think is going to be the most lucrative and easiest to manage opportunity on the chart, especially with gold, because gold has so many waves that it is information overload for most people. That's just the truth. Why we have so many people winning on gold in the community is because you teach them to only focus in certain parts and leave the rest of it alone. When you focus on everything, you're going to get shit, right? When you focus on those high tier price points that make ultimate historical sense, you're going to have a much better time of it. And with gold, this is important more than GU or NZD-USD or AUD-JPY or GJ because it moves so much. So with gold, we've had some strong target hits. We've remained patient. We found some great trades. Last week, we found another. We had another great run, right? This was Friday. This was this right here, this one entry, right? All day today, what I've been saying is when it's flat, avoid it. But I also said when it's on trend, I get that more than when it's against the trend. Gold is bullish, period. There's no other way to break that down. Go to any look at this thing. This thing is fucking bullish. We've been buying on this. For those of you who were with me in the other community, I've been buying on this since COVID. Since COVID. And if it wasn't for brokers liquidating my entries because they are assholes that don't want to see 4-year-old entries still flying, right? If it wasn't for them, I'd have entries from 2020 on the buy side. But, in this new community, I'm still buying. I'm still doing my thing. And most recently, in the end of June, this market was tanking. All right. And this is going to put a nice bow on today's conversation. The market was tanking 700 pips down. Every single piece and thought process of day-to-day activities inside of the community, inside of the main channel. The conversation is always going to be the same when this is happening, because remember, just because we're having this conversation today, there's going to be people in the future who they never heard this before. There's going to be people who've gotten lazy and they need to be reminded, stop doing that. Okay. So when the market is melting, everyone's brain is going, well, it's definitely going to be bearish, and they're selling at these little consolidations, trying to break the low, and they're ignoring the main point here, which is that if I go to a higher frame, this is exactly where we've been every single time we've had a run. Now, we've bought here back in 2024 April, here back in May, here back in the beginning of June, and then eventually it came back at the end of June, and then it never came back for a 1,900 pip run. Here's the fucking truth. I could have easily lost just like any other trade, but I didn't. I approached it the same way I always approach it, which is we enter, we put risk in there, and as long as it doesn't give me a reason to take it out, we let them fly. Because that is why you place a stop loss. That is why you use proper risk management. That is why you don't bet the house on 40 pips. You let the market do the job for you. Let it do the heavy lifting. You didn't know gold was going to move 1,800 pips. You had no fucking clue. Neither did I. Okay. At that point, it looked like maybe we go back up, right? That's as good as it's going to be. We broke a channel. We're back in the lows, and I'm still like, hell yeah, I'm still buying. There's no way I'm going to give up. Then the market takes off, right? And slowly starts destroying every single seller target possible. For those people who trade like a SMC or a ICT, right? They're thinking of it like we're going to go find that seller liquidity. All right. Well, seller liquidity has been drowned. They've been stepped on. They're fucking, they put them on the floor and they're hitting them with the fucking the best knuckles to punch somebody in the fucking nose with. Boom, over and over and over again for an 1,800 pip run. I feel bad for the person who's like, yeah, man, it's seller strength, and we're going to take a sell because Fibonacci, and they're looking at it bearishly. What is the mistake? today's theme, right? What is the mistake? You never allow, if you're like all out bearish on this, you never allowed it to break higher frame buyer structure. It's what we do on every single chart. We have to, in order for me to switch my trend, I said it on GJ like 10 minutes ago. In order for me to go, okay, that's it, enough with this trend, I'm gonna switch it. I need to see it on the higher frame. The same thing that I would do, let's say, for example, here, right? As the market breaks this, we're gonna run through gold real quick. 5 minutes. 5 minutes. This is the beginning of the gold run, the most recent. Seller Fibonacci, boom. Market supports, I swear, I'm going to say it. You know what I'm going to say? This is inside of the community. I promise you that this is a concept that we use all the time. Bearish Fibonacci. Market breaks over the bearish Fibonacci, meaning sellers are slowly getting drowned out. 61.8, 70 level support, meaning what was once resistance is now support. Slowly, 28th, 1st, 2nd, 3rd, and now we're in July, slowly, 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 and then bang. And then the market does it here. This is this Fibonacci, 78, slowly, 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 bang, right? Look at us. Look at this. Gone, over, finished. The problem is that, yeah, you could take some sells and they're quality. Not saying that, they're quality. But to think that it's all out bearish and you're not going to put as much double, triple the care into your sells as you would a buy right now would be insane. That would be insane. Now we're seeing a bearish run right now. The reason is all-time highs. This is profit-taking city. You got to take profit up here. We've reached all-time highs. You have no idea. We're thinking of it like as a market. You have no idea how far this is going to run. So it's a good place to take profit. Market then creates a Fibonacci inside of that high, and we've been ripping lows all day, every day. Sounds like a party at Diddy's house, right? Ripping those lows. So when we continue on here with this bearish Fibonacci, we had some strong buys. They went okay. Eventually took an L on gold, dumped the trade, stopped the fucking bleeding like a party at Diddy's, and then we just kept watching it drop. Now, at this point now, everyone's mind is going, well, does it mean it's going to correct? The way that I'm going to play this is the way that I would always play this, which is if we can't break levels over multiple days, then all it is a simple retracement of an exaggerated move. All right. It's an exaggerated move. We take this buyer Fibonacci, we look at it. Everywhere where I have entries, this thing is still beautifully aligned structurally. So I can get rid of these little micro zones. I don't need them. I can get rid of this fib. I don't need this. I don't need that. I don't need that. Let's see here. Okay. So this is the way it's going to play for me. I know that I have my target hit. I know that I'm going to delete this. I'm going to do it again. I know that the market may be breaking trend line, but I also know that false breakouts happen all the time, especially on 1800 pip trends. So what I'm going to do is I'm going to lower the frame, and I'm going to pay attention to this lower frame right now to time myself back into a buy. I want to see at least the micro frame be in my favor. So we got, because of the gap today and the movement, because of Biden dropping out of the race, we have our first little micro break to the upside. So the next thing that I want to look for, fuck off. The next thing that I want to look for is bearish Fibonacci confluence. I want to either find support over 4 hours from this lower price or be inside a New York session from a higher price to be able to take the next run. That is what I'm looking for. Right now, as it looks, I don't know where this is trying to go. If it goes even lower, that works for me because then we're getting an even higher tier price. But as it is today, right now, at this very moment, I have to embrace the possibility of a sell, which is why you hear me being careful about the next buy. We've hit a target. We've melted to shit. Now we need to see something on the buyer side. As always, I would rather be in a better price because we were once bullish, so it's easier to find pockets of buyer strength as it drops, even if it's meant to be bearish. Let's look at an example of that. It tests a strong price. That's 100 pips, right? It goes lower. That's 90 pips. It goes lower and tests a strong price. That's 150 pips. That's the beauty of trading a highly volatile asset, that the better price is always going to give you a better chance of finding a little bit of time between you and the decision of, oh shit, do I cut this? Do I drop it? What do I do? What do I do? When you're on an asset and you picked it wrong and you're immediately negative, like an AUD JPY or GU, and you're wrong, and you don't know if you're going to get retested. But gold is highly likely that can happen to you, even if it's 100 pips up. So when we look at gold, I want to embrace a lower price to get +1 on an old entry. That'd be nice, but I have to have plan A, plan B on continuation because it's gold and gold is bullish. And the moment that we opened up today, it went bullish. What about the fib on the lower frame? Because I know that's something someone's going to ask. This, right? I know someone out there is doing that right now. It's too close. So I'd rather get retested within zone if I'm going to be aggressive and put in that participation risk. And that's it. Are there any questions, concerns? We've had a monstrous July. It's supposed to be slow. Let me just put this into perspective here. This is last week, 120 pips, 500 pips, 8,000 pips on Bitcoin. We could ignore that negative 55 pip loss on gold, negative 35 pips on GBP USD, no activity on US 30. The week before that, again, some losses, but 4,000 pips on Bitcoin, 100 pips on GJ, 1,000 plus pips on gold, 80 pips on GU. This month has been strong. What is that? What about reverse lower frame fib as opposed to bullish one you just drew up? Reverse lower frame. To take it bearishly? To take it bearishly. So to take it bullishly, the reverse, it's this, right? That's still there. Yeah, if it's this, that's exactly what we would want. The only thing is, to start the day, Asian London, I'd rather embrace a sweep of the low. That always makes the most sense for me. Which also means if we start trending, every single markup here becomes even more valuable. So I don't know if that's something we talk about enough, but it makes sense even on a sell here. Because the market got into the high, every single seller point that was once maybe a pivot for people to sell off of, like, for example, this line, becomes even easier to sell off of because we now have the fuel, seller pressure, to actually sell with some real sentiment. It's very different to find the reversal position when you haven't hit a target than when it's a reversal and you've already hit the best possible price on the screen, especially all-time highs. And when you look at this here, the buy, the reason this buy got so strong is fundamentals, right? News is a big piece of it. The other part is this is prime price. This is a price that was built all year. So if we come back down here again for whatever reason, I'm going to do the same thing. In order for these markups are all about whether or not I'm going to finally switch trends. It's going to take a lot for me to switch on gold. It makes absolutely no sense where we currently are fundamentally and technically to switch. Right now, it's just a matter of finding a better price. That's it. So if you're a seller on this, Kevin, I'm not saying you're a seller, but if you're a seller on this chart, I get it. You're giddy after everything that's happened bullishly, but I would still be very careful about thinking that it's all out bearish, especially with this new piece of news that got thrown in here. For whatever reason, what we've noticed is that every time that it leans towards Trump winning, gold skyrockets. Now, someone's going to say, oh, because they think that the dollar is going to die. I think it's just a matter of instability in the presidential race. And listen, no politics. I don't give a shit if you want to vote for Trump or Kamala Harris. I don't give a crap. The only thing I care about at the end of the day is some sort of stability, because this is what happens when no one knows what the fuck's going to happen. The money runs to gold. That's just the way it's always been. Now with Bitcoin, it's caused less of that. But as you can see, we're still in all-time highs. If it wasn't for Bitcoin, I can only imagine how far this thing would be right now. If gold sweeps 2,400 tomorrow New York session, is it low risk or higher risk and took off from the 2,400 today? 2,400. That would be right here. I want to get +1. My entry is at 2392. So that's where I'm at. So basically, I want to get +1. What I'd be doing the moment it got here, though, is if I get +1, is re-enter risk. So it would be 25% of the allotted risk for the chart. That's going to be on a pending order. As long as it doesn't, as long as it's not like a dagger drop and we're kind of stuttering around, I'm going to have a pending order there. That's pretty much it. Austin said new lows created during Asian London, followed by bullish New York, creates a nice daily bullish candle. Makes sense. Yeah, yeah. So that's somebody's been studying. Yeah, that's exactly it. We're looking for the holy shit. We're looking for the market to create that daily structure, right? Let's take that full Fibonacci. This makes a lot of sense from here. See, this is it. This is the spot. This is the spot, the make or break for the sell, in my opinion. And that's that, man. That is that. That is that. All right. Any questions, concerns? If not, we're gonna call it. But I do need. I haven't done this in a while. I want to get you guys on screen. Turn those cameras on, please. Do me that favor. Damn, hoodie's up. Need a haircut, huh, Roman? All right. I'm gonna give you 10 more seconds. Remember, we're starting the week with no news, so we don't have to rush into the charts. I get it. I think one of the things with the weekends, especially for beginners, is like that anxiety, like, oh man, I can't wait to get back in the chart. Suckers play. Take your time. It's not about speed. You need the right trade. All right. Come on, come on, come on, come on, come on. All right. All I need is a thumbs up in 3, 2, 1. The music will take care of the rest. 3, 2, 1. Thank you. I appreciate you guys. Remember, if you need anything from me, all you need to do is message me. I am always around. As always, happy trading. Dun, dun, dun.